Hey there, everyone. Dave Keller here with Market Misbehavior. I want to thank you so much for joining us for our latest episode of the Market Misbehavior podcast. Our goal with this newly launched podcast is to share some great conversations with some really sharp people that know the markets, people that have been working with institutional investors, people that have had success in trading, in strategy, in research, in portfolio management, in technical analysis, and share some of their best practices, share some of their current perspective on what they see as opportunities, where they're finding opportunities in the current market environment, and also what sort of defines their process, what sort of tools and techniques they use to try to have an edge. Today, I have a really good conversation to share with you with Joe Rabil of Rabil Stock Research. Now, Joe's been in the markets for quite a long time, a couple decades, I would say, and Joe's most of Joe's experience is working with institutional money managers, with fund managers, with people that manage other people's money. And there's a different mentality that I've found, having worked with institutional investors and worked with individual investors and financial advisors. I would say those three buckets of market participants have sort of different ways of thinking about the markets, different ways of thinking about potential returns versus potential risks. Things that one of those groups, consider very straightforward, a different group will struggle with, and it's more just, I think, the culture of these different types of market participants, what motivates them, and all of that. So, if you're an individual investor, I think this is a great opportunity to learn from someone who has spent most of their career working with money managers and really trying to help them outperform. Our wide-ranging conversation hits on what he calls the trend year, which is thinking about the 12-month period just like you would a trading day, and thinking about what we can learn by what the market has done in the first 3 quarters of the year, and use that to inform how you think about the fourth quarter. That's the first time I'd really heard that term and that approach. I really appreciate his comments. Joe heavily uses certain technical indicators like the ADX line and the Directional Movement Index created by Wells Wilder. Has some great examples of where the ADX line can be quite helpful in helping you differentiate strong performers from underperformers. We talk about volatility and different ways to measure that from a technical perspective. We talk about a number of different areas of the market: small caps, semiconductors, some of the growth leadership names, and what they've done. The challenges for active management here in October of 2024, when you have a market that's sort of stalled out and some of the largest names sort of struggling to follow through. Also, the issue of top-heavy benchmarks, the S&P and the NASDAQ, and a lot of sector ETFs being dominated by a handful of names. Really enjoy this conversation with Joe Rabil, and I hope you find the same. Hopefully, it helps you think a little bit about what tools you're using, how you can really think about volatility and the trends over the course of the year in a little bit of a different way. So here, please enjoy my conversation with Joe Rabil of Rabil Stock Research. So it's awesome to sit down today with Joe Rabil of Rabil Stock Research. Joe, welcome to the podcast. Good to see you again.
You too. Should be fun.
Always a pleasure to catch up with you. It's been fun interviewing you over the years here, and I know you're a fellow Stock Charts contributor. I know a lot of people follow you and your work there. Talk to us as we are looking at the S&P 500 here, beginning of October. We're sort of still at or near new highs. Take a step back for us when you reflect on what you've seen year to date and thinking about what's to come. I mean, where's your head at? Are we still in a position of strength? Are you concerned at all given the instability, the uncertainty here? Like, talk us through just your high level view of the S&P at this point.
Yeah, so there's a few things. Number one, I think the momentum is strong enough to keep things going overall. But one of the things, the concepts that I have learned over the years, so I did a lot of day trading early on, and I applied a significant amount of what I learned to longer term charts. So there's a concept that I kind of created on my own called what I would call a trend year. And that if we look at it from a day trading standpoint, if you open the day at the low of the day and you trend all pretty much for the day, and you make it through 2:30, which is like the last time you could have a turn time for the day, and you don't turn, and you get to 3:00, 3:30, there's a pretty high probability you're going to finish the day near the highs for that day. And so having that trend day concept and applying it to a yearly bar chart, we opened this year at the low. The low week of the year was the first week of the year. and we have been trending all year pretty much. I mean, we've had a
Right.
few blips, but for the most part, we've been going up. And I think if we can make it through October, which would correspond similar to like the 230 turn time on a daily chart, if we make it through October and we get into November, then there's a pretty high probability we can close near the highs of the year. We open near the lows, you close near the highs. That's a typical trend type of a bar. So I'm
Hmm.
kind of leaning in that direction right now, just based on the way things have gone so far this year. Now, obviously, with the election, that could throw a little wrinkle into that.
Yeah.
But I am watching pretty closely how things play out this month, because I think if it stays stable enough and doesn't give it back, then doesn't have a real correction starting right now, then I think that it increases the odds that we could finish the year okay. Now, one of the things that is bothering me, and I did watch your show yesterday in terms of the market, and you're not, and I think you were looking at, if I'm not mistaken, I think you were looking at AD lines not looking all that great. Is that
Yeah.
right?
All the breadth data. Yeah.
Right. So what I'm looking at is we have this breakout that took place a few weeks ago, and it's turned into like a nothing burger. I mean, it's just nothing's happened. If you look at the 2 weekly bars since the breakout,
Yeah.
it's really pretty pathetic. I mean, there's
Yeah. It's
no,
it's it's not great, right?
they're narrow range bars.
Yeah.
Like you don't usually break out and then have a narrow range bar right away. It's not usually a good sign. The other
Yeah.
thing that I don't like, and I'm an ADX guy, is both the daily and the weekly um, DI, positive DI, which is the strength of the buyers, has
Mm.
not confirmed this new high. So, I mean, obviously, I would love to just see it happen on a daily chart and make me feel a lot better about this breakout. And it could happen at any time, Dave. It's not like it's failed, because the sellers are really weak. There's not a lot of strength in the sellers either.
Right.
So that's what I like about ADX, is it kind of divides it up, and you can look at the strength of the buyers separately from the strength of the sellers. And in so doing, we can see, where each is situated. So we haven't had a lot of strength in the sellers, but this recent breakout is the first time we've kind of not seen real good confirmation in the buyers. So it
Yeah.
does have me on kind of high alert.
Yeah, so this gap higher that we had sort of mid-September, that was after the September Fed meeting. We really have, I mean, we've gone nowhere in
Yeah.
those weeks after. It's in, that whole idea of the trend year, and just thinking of this, through the course of the year. If October is strong enough, then probably November and December are going to be okay, right? At least okay, if not pretty good. The seasonality, certainly in November and December, would agree with that, right? Because November and December are probably two of the strongest months on average. But October actually tends to be kind of weaker than normal. Does the seasonality that normally happens in October play at all into your thinking here? Or is it more just let's follow the trend and see if it's able to hold?
I think it really depends on the year. And there's
Yeah.
another factor that plays into it, and it's where is the volatility situated?
Yeah.
And right now, the volatility is not in a good, it's not really situated well. I don't think it's a good condition. Now, I
Mm.
divide it up. The way I do it is I have a daily and weekly version of volatility that I use the average true range of the S&P in both daily and weekly.
Okay.
And
So you're
so,
not using the VIX when you're talking about volatility. You're talking about the average true range of the S&P or whatever index, right?
yeah, and
Yep.
I've done this for a long time. And what I've noticed is, so it's the size of the bars, right? And
Mm.
so if the size of the bars are not that big, oversized, and not crazy, then we're usually in a pretty solid environment. Low volatility. You don't have, typically big bars and big movement is typically signs of distribution. And
Yeah.
so we're not really seeing that. And right now, on the daily chart, we're not really seeing. We're seeing a lower volatility condition in the near term. But on the weekly chart, I really don't like the look to it. It's the last couple of weeks have actually helped, but think about what the last 2 weeks are doing. It's not really a
Yeah.
good sign, right? I mean, we tried to break out and we have low volatility after a breakout, but so I'm leaning towards that sort of playing into the fact that we could have some choppy action here
Yeah.
over the next, couple weeks, maybe in the next month or two, potentially. It doesn't necessarily hurt that trend year, because the underlying conditions are still okay. The monthly
Yeah.
momentum is still pretty good.
It's interesting when you think about it, and when I look at the chart of the S&P, it's not like we're going down at all, right? But we're certainly not going up at the moment, right? We're sort of like we sort of stalled out a little bit. Small caps are one area of the market that I know through the course of 2024, at times it's felt like, okay, here's where small caps start to emerge. Okay, I guess not. And then, are we at a point? How important would you say it is? Is it that small caps start to participate or even start to lead? Would that sort of add to the idea of a more constructive end to the year?
Yeah, I mean, it's really been pretty frustrating. I mean, one of the things so I had a client who recently retired who was a small cap growth manager. I worked with him for 25, 30 years, and
Okay.
he was one of the top small cap growth guys for years. And one of the things I did a report from every week, and one of the things we included in that report was the relative performance. Well, it was the price action of the IWM, but then also the relative strength of the IWM versus the S&P. And what I found through the years is that when the IWM is underperforming, it is just a much more difficult environment. And when it is leading and it is the relative strength line is going up, it's the type of environment where it's like everyone's a genius, everyone feels good, it's the market's just helping you rather than you can't be a novice and make money when that relative strength line is dropping. But when it's rising, you cannot be perfect. You don't have to be perfect because things really play in your favor. We don't have that condition in place right now, and we need that. Now, the good news is if you look at the IWM chart and you look at a 5-year chart or something like that, it looks like a monster cupping pattern. It looks almost like a big cup and handle trying to
Yeah.
develop here. We need this to kick into gear, I believe. If we're going to expect a lot of upside potential from here in the overall market, and I'm not talking just in the IWM, I'm talking about the general market, I think it's got to come from here. This is the
Mm.
best looking pattern that still has potential, but it hasn't kicked into a leadership role in any way, shape, or form. And I'm not even talking, I'm just talking about a relative strength line starting to go up rather than going down.
It's I love that you mentioned sort of the weekly chart because so many things, particularly growth areas in the market that have had a really strong 2024, they feel arguably pretty overextended still, even with some choppiness. But small caps sort of still trying to emerge from a longer term base. I mean, it's interesting. Another area of the market that has been, and I guess maybe starting to re-exert itself to the upside, semiconductors, right? Sort of that growth, that area of growth leadership. Do you see opportunities there? Do you go into like an AMD and Nvidia starting to emerge? Is there enough to sort of follow that higher, or still more to be proven? Do you think?
Yeah, I mean, it's kind of interesting. They've made such huge moves, right? I mean, if you look at AVGO and NVDA, I mean, it's just crazy how big a move they made. But I have to, this is something I learned from Dave Landry years and years ago, is you go with what you see and not with what you believe, right? And so what I'm seeing is not a topping pattern in my world. It
Yeah,
just doesn't look like a topping pattern to me. It looks like a pause in an ongoing uptrend. Now that can shift, that can change. We could see some signs of distribution take place, but right now I'm seeing more of a corrective pattern that looks like it has more upside to me. Now I'm
yeah,
not saying it's going to happen today or this week, or it might take a little bit more time in here to chop around a little bit, but again, I'm more inclined to believe right now when I look at something like AVGO and look at something like Nvidia, um, even an AMD, which is kind of a lower level pattern. It hasn't
yeah.
really. It's closer to longer term support. I mean, when I look at those, they look more constructive to me rather than something that's getting ready to make a drop like SMCI did or something like that. They don't look like that to me. So, you
Yeah,
know, I think that's an encouraging sign. I mean, there's a positive to that and a negative, right? I mean,
yeah.
we don't want these stocks to just be the ones that go up and everything else just does nothing. I mean, I don't think that's a good sign. That's a sign of ending action rather than you know,
Yeah.
hey, it's we want everyone to join in, not just them just leave everyone behind.
And honestly, that's sort of, I mean, you and I both work with institutional money managers. That this is like the worst nightmare for active managers, right? It's like the market goes up, it's a small number of big stocks that go up, and any other bets you're making are hurting your performance. It's kind of an active manager nightmare, I feel like, right?
Yeah. Yeah. And you know, and it's gotten worse and worse when you look at the percentage weightings that these
Mm,
stocks are, right? I mean, to
yeah,
me, that's everything. If you look, the weightings are so skewed, they're so screwed up right now that I'm pretty sure. I think it was when they had to change the weighting for Nvidia and Apple. I think in the XLK, because the rules when they originally created it weren't weren't expecting anything like this to ever happen before.
yeah.
You know what I'm saying?
Yeah,
So
they have an upside limit to how big of a weight they can be in the
if it's
ETF.
over 5%,
Yeah,
and and so they had to make an adjustment to it, and it ended up having like Apple be way smaller than Nvidia, and then I think
yep,
they switched it. I don't know. I
yeah.
haven't kept track of that, but what I do know is like when you start to look at the weightings, and I do a report each month called the heavyweights, which is basically the biggest 30 names, and I
Mm,
think those are the controlling names. If you know what's going on with those names, how they look, what they're going to do, what the momentum looks like, you have a pretty good feel for what the market's going to do.
sure.
And I think the same thing holds true for each one of these individual areas. I mean, if you look at the XLC, the communications area, it's pretty much Meta and Google, right? I
Yeah,
mean, I think maybe Netflix is in there too, but I mean, those make up such a huge portion that whatever they're going to do, that's what the index is going to do. You
yeah,
have to
yeah.
recognize that, good or bad. You just have to know it and recognize it. And so that means you have to spend a lot more time focusing on those stocks to see how they're going to affect everything else.
I think a
One
lot
other
of
piece
yeah.
of the note I will say on the XLC is that we've finally gotten stocks like VZ, Verizon and AT&T turning around for the first time in a while. I mean, those
Yeah.
charts look pretty good. It's pretty amazing.
How much was something like AT&T? I mean, these are some of the old telecom names, right? That used to be their own sector. Now they're kind of grouped in with media and entertainment and a lot of internet names. Obviously now, how much of AT&T's strong performance do you think is sort of an income play, like a yield play, as rates are coming down? How much when rates go back up, does that scare you out of an AT&T? Is that the justification? I mean, how do you kind of factor that in?
Well, I think there is some of that
Yeah,
involved. And I mean, even, you could even say the same thing for IBM. I mean, IBM before it broke out and took off like a right, it was paying over
yeah,
5%, right?
yeah,
So I think that has played a role in this. Now, as I said, like if you look at stocks that are dividend plays, the REITs and the utilities and stuff like that, they just don't look like they're ending to me. They
yeah,
look they look more like they need to take a breather because they had a nice leg here.
yeah,
Utilities are just really strong,
yeah, yeah,
but they're ahead of themselves.
yeah.
But when I look at momentum, and again, I usually gauge that. I do look at MACD for momentum, but I'd really like to use ADX because it gives me specific levels to be on the lookout for. And the ADX on the utilities is very strong, and it's the first
Oh, yeah.
time it's been strong in a while, based on the buyers.
Right,
So
right.
and so you can go back on that chart and you can see all those pops in the ADX line prior to this year were all based on the sellers, not on the buyers.
Yeah, right, right,
So
right.
so we need green DI on top and we need that ADX line moving. And that's what's happening here. And again, when you go and look at some of these charts, they're big, huge bases. So
Right.
I'm inclined to think, yeah, we could consolidate, pull back, take a breather here, but I think there's more coming. And so I would say the
Mm,
same thing about these other areas, the REITs, your AT&T question. So if we've got a good enough momentum condition in place, it does not going to necessarily scare me out. If rates shift enough, then we'll see sellers come in and it'll change the picture of the momentum and it'll change the picture of the so I have there's two parts to everything. It's the up move I'm measuring, but then I'm also measuring the pullback. So if we get a
yeah.
pullback in the rates and the utilities and it's really hard, like they're really selling it, then yeah, we've probably made a top for a while. And even though
Mm,
we made strong momentum on the upside, the pullback is telling us the sellers are just too strong. So right now,
yeah.
I'm inclined to think that's not the way it's going to play out, but it is something I'm going to watch.
So when you think about 2024, it's been, sort of Q1 was very growth oriented, kind of Magnificent Seven leading the way. Second quarter, we sort of diversified into other value oriented sectors like industrials, materials, kind of things. Third quarter was a very defensive quarter up until the end, right? Like July and August, all of a sudden utilities, real estate, even staples start to look good. When you're looking at Q4, we've talked about a couple areas, some defensive areas like utilities still hanging in there, semiconductors and some technology. I mean, Palantir and others making new highs. I mean, if you had to pick, like, where do you see the best opportunities now, Q4?
Yeah, I knew this question was going to come up. So I was trying to actually
No, you didn't. You had no idea, Joe.
no, just knowing our conversations in the past.
Yeah, yeah.
One of the things I went through, so I do a report each Wednesday, and I go through all the stocks that are what I would consider to be, interesting, right?
Yeah.
And I've got a list of I start with like 3,000, but then I take it down to about 300 to 400. And I went through all those this morning for my report for tomorrow. And one of the things that struck me, like I'm still seeing pretty attractive patterns in the financials,
Yeah.
but it's mixed. And then I'm seeing some attractive patterns in the industrial space, but that's also mixed. And then
Mixed meaning not all financials look good. It's certain pockets. That's what you mean, right?
right. It's
Yeah.
almost turned into a little bit more of a stock picking environment because I can go and look
Mm,
at basic materials and say, you know what? I could find there's some chemicals showing signs of improvement, a little breakout in DD, right? And then we also have gold, obviously, that's been trading exceptionally well. Silver still looks pretty good. If I go through basic materials, I can look at some financials. Like I really like the action in the asset managers,
mm,
but they're a little ahead of themselves. They probably could pull back a little bit. But I'm noticing regional banks that are smaller cap that would actually be in
mm,
the Russell 2000 that have the potential, if they play the right way over the next couple of weeks, could really be great performers to finish off the year. So
mm.
I'm watching that pretty closely, but they need a little bit more confirmation, but there's definitely some interesting patterns in there.
Yeah.
And then if you look at what happened recently, the airline stocks actually kind of came on. If you look at UAL, I mean, that's a beautiful breakout in that stock.
Yeah.
So, we already had the move in the big aerospace guys. Those things are almost overdone,
Hmm.
and so industrials, it's sort of a mixed bag too. So every time I went through each sector, I kind of felt like, and I can always find technology. I mean, look, there's always it's too big of a sector. There's
Yeah.
so many stocks.
Yeah.
You can always find something that's kind of doing its own thing and looks attractive. It's a little bit of a bonus for technology that the AI stocks, I think, are correcting the right way.
Yeah.
So yeah, I would say the only negative about the utilities right now is they've made such a big move. It's just hard to imagine that they're not going to take a little bit more of a breather or something like that. So that might question whether they can really be the leaders of the fourth quarter.
Right.
But I don't really think that changes the trend as much as, yeah, they probably aren't the ones I would buy today.
Yeah. Right. 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 We only have time for like one more question, Joe. But this has been awesome. I really appreciate you answering all of these. More of a high level question here. What does risk management mean to you? And the reason I ask about that now is because we've got a hurricane preparing to probably ravage a lot of Florida after another one that just came through the middle of the country almost. Geopolitical risk in the Middle East, an election season that's becoming highly contested, of course. As you're approaching stocks day to day and looking at stocks and ETFs, what does risk management mean to you when you have all of these macro factors? The Fed, we didn't even mention, that all have market moving potential. How do you think about risk management in that kind of environment?
Well, what I teach my guys is that I basically say there's a couple of things. Number one is you never risk more than 1% in any one uh, equity.
Hmm.
At least that's the way I recommend it. Keep it around 1%.
Yeah.
And if you do that, and then you keep it honest with your sectors, and you keep it at maybe 3, maybe 4% max for any one sector, because it's very, very easy these days to just, throw all of it in one area you think looks great. And then you're taking just a massive amount of risk. So those are a couple things that are just, pretty simple things to just keep that in mind. But then the other thing is when the volatility is high for me, and what I teach is I actually go down to an hourly chart and I watch for signs of topping in the hourly S&P chart. And if it is, then I use a hedge. I use the SPXU as a hedge against what longs I do have. So if I'm trading longer term trade, like I try and do more longer term. I don't trade. I used to day trade, as I said to start the show, but the reality is I do a lot more longer term investing now. And I like to put those on if they look really good and they meet my criteria. But at the same time, if the S&P is in a position where there's more risk, I like to put on a hedge against those longs so I can hold on to those longs through pullbacks. And then obviously the key to risk management is using stop losses. And so at some point, if the market's bad enough, I'll get stopped out of all those. But in the meantime, I like to hedge when I don't like the volatility of the overall market. And then the hourly is starting to show signs that maybe it's shifting to the downside.
I love that. I mean, at least in my experience, a lot of institutional money managers seem to be way more comfortable with the idea of hedging positions. Individual investors think a little more binary. It's like, do I own it or not? And remembering you have a lot more levers you can pull as an investor. Hopefully that's a takeaway for people watching and listening today. Joe, this was awesome. I mean, you're a smart guy and you really know the markets. And I can't tell you how much I appreciate you sharing some thoughts with us. Where can people find out more about you and your work and follow what you're doing?
Well, one thing is my YouTube channel is called Invest Like a Pro. I also do a show for Stock Charts TV. And then my research can be found at rabilstockresearch.com. A good starting point, if you like to learn more about multiple time frame trading and MACD and ADX in multiple time frames, is just starting. I have a book that I've put out in a PDF format, an ebook, just to make it a low introductory kind of offer, and then you can learn more about it. I have courses and stuff like that. That's all at rabilstockresearch.com.
That's awesome. Book's fantastic, by the way. Highly recommend. Joe, great to see you again. I hope we can do it again sometime.
Thanks, Dave. I enjoyed it.
All right, take care. So what a fun conversation with Joe Rabil of Rabil Stock Research. Again, as he mentioned, you can find more information about Joe and his work at rabilstockresearch.com. Also, his YouTube channel called Invest Like a Pro. I really appreciated a number of things that Joe had to say, particularly his comments on volatility and how, just thinking about the range of not just a day, but a week, of a month, of a year. He and I, as we were talking off camera and on camera, we're looking at some yearly bar charts. Talk about something I don't do nearly enough, but, doing that and just talking about what that might mean and thinking about the longer term trends in a much wider context than I think a lot of us do was a very interesting conversation. I thought his comments toward the end about risk management was sort of a mini masterclass for new investors. So if you're new to the game or you're just trying to make sense of things, I hope my conversation with Joe gave you some actionable ideas, some just some advice from someone who has used technical analysis and continues to do so to outperform. As a reminder, you can get all the information in the description here of the podcast, wherever you're listening to it or watching it. And thanks again for supporting me, Dave Keller at Market Misbehavior, and all the content we're creating to try to help you navigate these markets. Is there someone else that we should interview for the new Market Misbehavior podcast? Won't you let me know? Drop a comment wherever you're watching this and let me know suggestions of who I could sit down with virtually or hopefully in person as we start to travel around a little bit more for the podcast. Always excited to sit down with top market practitioners and share some of their comments and words of wisdom with all of you. For Market Misbehavior, I'm Dave Keller, and remember, it's always a good time to own good charts. Have a great one.